Hello friends, this is Raj Sastry from Raj Option Trading. Today is December 18, 2021. Let's look at stock with a heavy short ratio. So when the short ratio is high and fundamentals are good for the company, uh, typically it causes a short squeeze. Short stocks go higher and these shorts will try to cover and stock will still go higher. So we look at some of those scenarios and identify stocks with a heavy short ratio which can create short squeeze. And we'll do a quick market update. I know many of you are wondering, hey, interest rates are going high. What should I buy now? So we'll look at some of those situations here and compare the current situation to 2018 where we had interest rate hikes. And let's look at top stock with a heavy short ratio. This is for the daredevils. We'll look at all the stocks where we have very high short ratio. And progressively, let's look at positive gross margin companies with the low RSI and high short ratio. These are typically better candidates than the first category where just heavy short ratio is there. And then we'll top it off with the better way to grow your portfolio. Rule of 40 where sales growth plus gross margin greater than 40% and low RSI. This is typically a better way. I typically look at this list as well as the following lists here. And let's also look at even better way to grow your portfolio with the stocks where we have positive gross margin, positive net margin, low RSI and low valuation. And we'll also look at last scenario when the short ratio meets TTM squeeze. So TTM squeeze typically happens when the TTM squeeze occurs, stock has to go up or down very quickly. And when there's a high short ratio, this also creates a short squeeze. This is a double whammy. We'll look at some of those scenarios and see if we can buy any of those stocks here. So with that, let's jump in and get started. So as you scan through here, this is a one-day chart from yesterday or Friday. As you can see here, we had a big drop in Dow Jones Industrial Average. Nasdaq, look, Nasdaq is down 0.07% here. It was down much higher, but it recovered a little bit toward the end here. And S&P 500 also down nicely here, down 1%. And advanced decline line is pretty okay here. So if you look, we are almost close to 50-50 here, which is a good situation. This was much bad on Thursday, but now it's a little bit getting better. So with that, let's jump in and get started. As you look through here from a market news perspective, we got Dow Jones Industrial Average. It tumbles more than 500 points. It's a volatile week. This happens whenever Fed, makes some announcement of rate hikes and multiple rate hikes. This is always happens. It has happened in the past. And Fed is also talking about tapering the bond buying program. That can also cause some issue in the stock market. And we have Omicron virus here. It's a doubling in 1.5 to 3 days. This is a big concern. Hospitals are full, so we got to be watching this carefully. And we got whole market turbulence here. So we have holiday week coming up. Don't expect a smooth Santa Claus rally. We will have some turbulence. We'll take it, watch it closely. And we got here Chinese electric car maker NIO. They reveals the new sedan, augmented reality glass. The stock is oversold here. I would be a buyer of NIO at these levels here. And we got Bitcoin. Look, sky is falling. Bitcoin may not last much longer. Academic warns. There is a lot of negative news about Bitcoin here. What I typically do when so much negative news is there, I slowly start buying Bitcoin names, the ones I like Btbt, Marathon Digital, Riot Blockchain. I keep buying some of those names when there is too much negative news and these stocks are getting sold off here. It always paid off. We'll see how it turns out. And then we got here Netflix. They had worst month since September 2019. It's a very good stock. I've been accumulating slowly and positioning myself for a rebound as this stock rebounds. Typically around the earnings, this always typically rebounds nicely when it's sold off like this. And we got Accenture here, ticker symbol ACN. Accenture share jump. This is a very steady eddy stock here, very strong company. Typically, it's good to buy Accenture when the stock drops. It always does nicely. It's a consulting company, does a lot of good work in the cloud area. And then you got Fedex here. Fedex stock rallies on the earnings beat. It's I love to see Fedex rallying. When the Fedex rallies, typically when the transports rally, that tells you the commerce is intact. Folks are shipping, folks are buying online, and a lot of commerce activities are going on. That's a good story here. That's why this Fedex news is a good one here. That tells you stock market is not going to roll over that quickly because commerce is happening. That's why Fedex is shipping more packages. That's a good sign here. So with that, let's jump in here and go into a little more detail. So let's learn some lesson from 2018 rate hike. As you look here, 2018 March, our friend Jerome Powell, he increased the rate by 25 basis points from 1.50% to 1.75. And then come June, he increased it again by 25 basis points. Now it's at 2%. And he followed it up again and increased again in September 27 here, 25 basis points. It went to 2.25 here. And finally, he did one more rate hike here in December. And he also had some strong verbiage, like he's going to overshoot rate hike. And he increased to 2.50 here. Market took it very badly. There was no Santa Claus rally back in 2018. Stock market came crashing down. So that's the history for you. So that way you can kind of know what's going on. And we'll also look at a few stock charts to really understand this a little bit better and go from there. And fast forward right now, we are in December, and Fed officials are expected to release a new forecast showing 2 to 3 rate hikes in 2022. So look, there is some comparison here. Back in 2018, 4 rate hikes. Right now, Fed officials are saying they will increase maybe 2 to 3 times in 2022. That's why market is selling off here. We'll watch this carefully. One thing I'm a little bit positive this time around, Jerome Powell learned his lesson from 2018. So he'll be a little more watching carefully, look at the data. So as we have Omicron here, and there is some issue around the labor market in some pockets, I'm sure Jerome Powell will look at this carefully and will not overshoot and make drastic comments like he did back in 2018. So we'll watch that carefully. That's one of the reasons I am buying these dips carefully, especially good quality companies, profitable companies, and sock it away. We have seen this movie multiple times. It's always good to buy quality companies when the market drops like this due to Fed mandated fear. So with that, what we'll do now is we'll look at comparison. I will try to see what happened in 2018. Let me go here to Thinkorswim platform here. Let's do one thing. You can go here to the the tab here, edit studies. I will basically remove Procter and Gamble for now. Just a quick comparison here. Let's look at what's going on here. This is S&P 500. So we got here 2018 January to 12/31 2019. So it's about 2 years time frame here. We got entire 2018, we got entire 2019. So as you saw earlier, around March time frame, look, we are in March somewhere here. We had our first 25 point increase here. Look, stock market came rolling down. And afterwards, stock market went up. And in June, look, we are in June here. In June, Fed did one more increase here. Look, June, we came down a little bit, and then it went higher. And Jerome Powell did not like it. And in September, look, we are in September right now. In September, Jerome Powell did one more rate cut here. Look, sky came falling down. Down here, down. And as if it's not good enough, in December 20, look, we're in December right now. December 20 is somewhere here. Jerome Powell did one more rate hike here. So because of the stock market coming down, crashing, no Santa Claus rally, as you can see here. This was a very difficult December, and stock market came down. And afterwards, Jerome Powell realized he did something really terrible, and he started cutting the rates again, and that's why stock market rallied nicely. That's the lesson for you. This market, one rate cut, there will be some drop like it happened in March, but stock market will take it in with the stride, and it will slowly start going higher. Especially with Omicron, I think Jerome Powell will be a little bit careful. He might do one more rate cut potentially. That might again have a small drop here, like it did back in March, April timeframe here, and from there onwards, I think we have to watch carefully. If even if there is one more rate cut, it might come down a little bit. Look what happens afterwards. You got to you got to start cutting the rate again, and then stock market will come roaring back. That's why we got to have some cash. Don't go too much into debt when this happens. When the stock market collapses because of rate increase, and this one is a very bad one in December 2018. I remember this distinctly. I was trying to see what to do at this time, because entire stock market was coming crashing down here. So that's why if you're in margin, you will close your account, because there is no way you can recoup with this steep loss here. You'll end up getting margin calls. That's why you got to be careful here. Don't go into margin in these type of situations here. Instead, start buying some quality stocks. Take advantage of drop here like this. Buy some great stocks. Don't worry what pundits will say. They will say you buy consumer staples and buy gold, but don't worry about those things. If you are a long-term investor, buy some quality stocks. Buy some AMD, buy Nvidia, buy Apple as they drop like this. Those that will serve you well. If you keep fluctuating, and when the market drops, you buy consumer staples and gold. When market goes up, you buy cloud stocks. You will lose your shirt. That's why you got to stay steady here. Buy some profitable companies as the market is dropping, like Nvidia, like AMD, Apple, Microsoft. Great stocks like Oracle. Take advantage of the drop here. Buy great companies with a lot of cash and profitable companies. That will serve you right. I will cover some of those companies in my following videos, and you can look at those profitable companies and buy those names here. Don't try to change your strategy when the market drops. That's a very bad thing to do, because then you're neither here nor there. You'll buy some stocks like Procter Gamble or a consumer staples, but then you'll not do well. Market comes back. So that's something lesson from the past year. So now what we'll do is we'll try to compare. Right now we are in 2018 January to 2031 December here, 2019 December. Let's try to compare this right now. Let's go to studies here, and let's compare this to say consumer staples or XLP here. So we are comparing S&P 500 or SPY ETF to XLP here. Let's see here. Let's go back here and go here and say XLP. And let's show plot here, show study. And there we go. So now what we're doing is we have your S&P 500 here. Look, we have one drop sometimes in March, April time frame when S&P 500 dropped. We also have XLP, which is consumer staples, supposed to be steady eddy, that also dropped along with the S&P 500. So that tells you you can't just depend on consumer staples when the S&P falls, because that will also typically fall down. And then market came up again. Consumer staples also came down. Market dropped again back in December 2018. Consumer staples also came down. So it tells you when the market drops big time, the correlations will happen. Even if you think consumer staples is a safe play, it will also come down, as you can see here. Next, let's look at one or two more stocks here. Let's go back here. You might wonder, hey, what if I buy gold? Let's look at that scenario here and go from there. Let's disable or hide this study here and go to gold here. And let's show study for gold. All right, let's Let's look at gold here. Look, market dropped, somewhere in March time frame. Gold came up a little bit at the time. Gold is a good hedge, as you might be knowing. You have to be careful not to, buy gold when it drops like this. Then typically, it came little higher here, but then again it underperformed the market. When the market dropped here big time in December 2018 here, gold went a little bit higher, but then again it also dropped. That's why gold is a good hedge. Don't think gold is a good long-term play, but it's a very good hedge here. When the market drops big time like this here, look, huge drop October, huge drop in December here. Gold try to give you some protection here, although it's not a great long-term play. It will give you some protection. Now let's compare it with the TLT here, which is a treasury, and see what we can make out here. Let's hide this and go to TLT. TLT is basically bond here. Typically bond does nicely when the market collapses. Let's look at that situation here. And look here, we got market dropping sometimes in March here. When the market is dropping, look, we got a TLT here, trying to go a little bit higher in pockets here, and market dropped big time, as you can see in December. Look, TLT has gone higher. So that's why TLT or a treasury here, TLT ETF is a good hedge here, even though it's not a great long-term, from a performance perspective. It provides you some good hedge. When stock market drops, when TLT also drops, you could buy some TLT here, and it will give you some good hedge. When stock market further drops, TLT typically goes higher, so that's a good hedging type position here. You could go from there. And you might wonder, hey, what happens if the stock market drops? How about my, say, Procter & Gamble stock? Let's go back here and compare it to Procter & Gamble instead of XLP here, and go from there. All right, let's compare it to Procter & Gamble here, and let's also remove TLT for a moment. All right, so now we got Procter & Gamble, PG. Look, stock market dropped in March time frame, and Procter & Gamble also dropped. And stock market dropped again in October, November time frame. At this time, Procter & Gamble did nicely, as you can see here. So stocks like Procter & Gamble here, PG, as you can see here, they also provide some good hedge against stock market falling off, because typically when stock market falls off, you will be most folks will be swapping out of these high growth names like our cloud stocks like Apple, Nvidia, into steady eddy consumer staple type names like XLP here. That's why stocks like Procter & Gamble, even though they drop in the beginning initially, later they tend to do well. So look, the third rate hike here, stock market collapsed, but Procter & Gamble tend to do nicely at the time. So that's why stocks like Procter & Gamble can be good hedge, but over the long haul, S&P 500 and even stocks like Nvidia, they prevail. Just for the chickles, let's compare this to Nvidia here. Let's go here, and let's say instead of gold here, let me put Nvidia. All right, so look, it's a little difficult to read here. What I'll do is I'll disable, remove Procter & Gamble here, so that we don't get distracted. There we go. So now we got here Nvidia also. Look, stock market dropped here. Nvidia also dropped. Then stock market collapsed here. Nvidia also collapsed. Then stock market started going higher. Nvidia also did start going higher. That tells you Nvidia has got little correlation with S&P 500. It goes much higher or much lower compared to S&P 500. That's why when market collapses like this in say December of 2018 here, you could buy quality stocks like Nvidia or AMD. You would do great because they will come up nicely. You could use all the dips here. Look, Nvidia was much lower than S&P 500. All these drops are good buying opportunities. That's why, always buy some quality stocks when the market drops here. Don't listen to the pundits and keep swapping between gold and and Procter and Gamble and consumer staples. Instead, stick with some quality names here. Buy through the dips. That will serve you really well. So with that, let's look at the futures market here and look at what's going on. Let's jump back here and look at futures here. All right, from a futures market perspective, as you can see here, we had a little bit two bad days in S&P 500. There is a fear around the rate hike here, and look, S&P 500 came down to 100-day moving average here. What I will be doing is, from Monday onwards, I'll be slowly buying some quality names and go from there. If you're worried, you could even buy some QQQ or SMH slowly and accumulate because they're good baskets. They will do well. And look, we got Nasdaq here. Nasdaq also came down severely here. Nasdaq is below its 100-day moving average. Again, a great buying opportunity here. I recommend you to look at Nasdaq 100 stocks in general. Go after the profitable companies. I'll be covering them in my next series here and go from there. And then you got here Dow Jones Industrial Average. Again, this is also weaker here, trying to come below its 100-day moving average. We could buy some great names here. And you got Russell 2000 here. Russell 2000 is weak. It is even below 200-day moving average. There are some great buying opportunities here. Typically, Russell, goes much lower when the market drops. It will go lower than S&P 500. And now let's look at the bond market here and see what's going on in the bond market. All right, so as you look through bond market here, we got bonds rallying. Understandable, right? We got two bad days in stock market and two great days in bond market. That's what happens. They kind of go in the opposite direction. And look, when the bond rallies like this, interest rate comes down, which is also natural here. That's what is going on. And we got here crude oil here because dollar is going higher. Crude oil is a commodity. That's why crude oil is coming down because of the dollar going higher. And then you got gold here. Gold is trying to decide where to go. It had two good days here. Now it's trying to decide where to go here. Typically, dollar going higher will cause some issue with the gold also here. Typically, as as interest rate go higher, dollar strengthens, and that can cause some issue with some commodities like crude oil and also gold at some extent. So with that, let's jump in and look at high short ratio stocks and go from there. So as you look through here, we'll also review a few charts here. We look at X, Dynavax, and few of these names here. Let's go back to Thinkorswim platform. As you look through here, I will go to this chart here and look at few names here. Let's look at United States Steels here, or X. So this has got a high short ratio. As you see here, stock is trying to decide where to go, and look, it's trying to get bullish. Right now it's a bullish crossover with the blue line trying to cross over the red line. You can't tell right now. There might be a crossover. Right now it's a red line crossing over blue, but this situation can change. There is a nice on the balance volume here, and folks are also buying US steel here. So with that in mind, given there is a high short ratio here, I'm a buyer of United States Steel here. It's a $23 stock. You could slowly buy, and even IV percentile is low. Even if you're an option buyer, you could buy some Delta 70 long-term call option. That will also work given IV percentile is very low. And next, let's look at the Dynavax here, Dvax. Dvax also has a high short ratio, and look, this is trying to go higher as the market is going lower. And right now, from a RSI perspective, it's trying to go higher. And look, from a DMI perspective, the blue line wants to go higher, so it's trying to turn bullish here. That's a good sign here. Nice on the balance volume, tells you there are more buyers than sellers. And look, check-in money flow is going higher. That tells you smart money is buying Dynavax. This could be a good situation. You could buy some Dynavax here and take it from there. And let's look at one or two more here, and let's look at FLWS. So FLWS 1800 Flowers is a very steady eddy stock. This stock, as you see here, earnings, stock dropped. One more earning, stock dropped before the earnings, then went higher. And here we got one more earnings, stock went a little bit higher. Earnings, stock went higher. Right now we had an earning, stock came tumbling down. So at this time, 1800 Flowers has got a high short ratio, tells you there are a lot of short sellers breathing down its neck. And look, RSI is very low, tells you it's oversold completely here. And look at the DMI chart here. It's a red line on top here, blue line on the bottom here. Look at the distance. It's a huge gap between the blue line and the red line. That tells you it's completely bearish at this time. And look, on the balance volume is low, more sellers than buyers. Look, check-in money flow is going higher. The smart money, they know what to do. They're buying the stock here, taking advantage of this huge drop here. That's why I'm a buyer of 1800 Flowers here. Given there is a high short ratio, smart money is buying it. It's good to buy some 1800 Flowers slowly into this huge big drop. But I would say don't buy call option. Look, IV percentile is high, 45.4. If you buy call option, you're paying more money. I would rather buy the stock outright here versus call option. So with that, let's look at one of my favorite name here, DDD. You might know this very well. 3D printing plate, 3D systems. Look, stock is coming down, as you can see here. Trying to stabilize at this time here. On the balance volume is trying to decide where to go. Red line on the top right now, it's a bearish. And look, on the balance volume is nice and positive. Folks are buying this stock here, more buyers than sellers. And look at the check-in money flow. Smart money is also buying this stock. So I think they announced a secondary offering here. That's why stock came tumbling down here. I would be a buyer of 3D systems. It's a good company in the 3D printing space. We should take advantage of this situation where there's a high short ratio and smart money is buying it. That's a good situation to be in. And next, let's look at Btbt. You could swap this with other companies like Marathon Digital or Riot Blockchain. All are similar situation here. Btbt has got a high short ratio. Stock is $6.63, completely sold off, as you can see here. And look, from a DMI perspective, it's negative. Red line on top, blue line on the bottom. Look, volume average perspective, folks are buying it. Folks are not worrying about stock market coming down here. They're buying it. And check-in money flow is pretty stable here. A little bit down, which is understandable, but pretty stable. So time to buy these Bitcoin stocks is when there is a huge negative news in the market, especially in the Bitcoin area. Right now, folks are questioning the viability of Bitcoin and wondering whether it will be not existing in a couple of years. That's why there's a lot of negative news. I would say tune out the negative news. Buy stocks like Btbt, Marathon Digital, and Riot Blockchain. Even if you want to buy some Bitcoin and Ethereum, you could do that too. But it's a good time to buy Bitcoin. Given they're completely sold off here, slowly buy. Don't need to back up the truck and buy huge quantity. Slowly buy them. The downturn will continue for a few more days. You could keep stacking up and go from there. So with that, let's look at one more here. I like a Shift 4 also, ticker symbol 4. It also has a high short ratio. As you look at Shift 4 here, it's a fintech play. Look, stock is dropping off, trying to have a nice bounce here. That tells you at this time, given short ratio is high, maybe the short squeeze might start. People might start covering the shorts here. Look, DMI chart here. Blue line wants to go higher. Red line wants to come lower. Even though right now situation is bearish, indicated by red line on top here. But the trend is right here. We got blue line wanting to go higher. And look at the on the balance volume trying to improve here. The on the balance volume is trying to go higher after drop in. Smart money is flowing into Shift 4 here. That's also a good one here. I think it's a good one to buy at these levels here. And we'll look at one last one here. We'll go to Bcrx, Bcrx. You might know this stock here. It's a biotech stock. I like this company. High short ratio right now. Look, short ratio is high. Stock has been going down. Right now it's going higher. And look here, DMI chart here. The blue line is crossing over red line. That tells you it's a bullish crossover. And look, on the balance volume is trying to go higher. Check in my money flow is going to go higher. That tells you smart money is flowing into the stock. So with that, I would buy some Bcrx here, given that it's a high short ratio. As this stock can goes higher, these shorts can get squeezed and they will try to cover. That will cause this short squeeze even to go higher. So with that, what we'll do now is we'll look at our list here and go from there. So let's look at the sector and trend analysis. Look here. We got big ETFs, S&P 500. Look, 5 days down. On Friday it's down nicely. For 1 month also it's down. It's just below its 52-week high here, just 2.8% down. Even though there is a huge negative news in the market, rates are falling or rates are increasing. Look, S&P 500 is still at a stone throw away from its all-time high. That's why you got to be careful here. Buy some quality names and go from there. QQQ, look, it's down in 1 day, 3 day. It's down in 1 month also, and it's also just down 5.8% from 52-week high. So, some of these high multiple, high growth names can go some more down. That's why, buy slowly. No need to rush. I would buy slowly and accumulate. And IWM, the low cap stock here, look, it's down big time. Look, it's down for 5 day, down for 1 month, down for 6 months, and it's down 12 months from 52-week high. There are some great bargains in this space here. You could buy some of the great names in Russell 2000 and go from there. And then got emerging market. Emerging market is just a little bit down here. And before I go to emerging market, look, Russell is telling you, hey, you know what? I'm done going down. I want to go higher. That's why on Friday, even though S&P 500 dropped, Russell went higher. That tells you on a Monday morning, we can have a slight bounce in these averages. IWM can be looked upon as a leading indicator that tells you broader market might go higher on Monday. And then you got EM, emerging market. It's down, as you can see here. There are some great opportunities in this area also. And Dow Jones down big time. Transportation is down a little bit. I think this was helped by Fedex going higher. If transports goes much lower, I'll be worried. But transport went not as lower compared to S&P 500. That tells you, there is some positiveness in the market here. Stock market can have a bounce. So with that, let's look at financials here. As stock market came tumbling down, financials also did not so great here, as you can see here. So typically you would wonder some bank stocks might do well, but this is a bigger financial basket here, did not do well when the market crashed here. Energy also came tumbling down here, as you see here. There are some good bargains in the energy also at these levels here. Interest rates are also down. And only thing positive right now is TLT. It's the bond market. Bond market is going higher, as you can see here. Real estate is also, it's a little stronger compared to other areas here. Look, real estate is up in 5 day, 10 day, and so on and so forth. It's also a little stronger here, and it's just down 1.5 times percent from its 52-week high. On the other hand, Bitcoin is down big time. Look, 40% down from 52-week high. It's having a bloodbath in 1 day, 5 day, 10 day, and so on and so forth. That's why it's good to buy some Bitcoin stocks and even Bitcoin ETF if you want. And you could also buy actual Bitcoin if you have an account in some of these trading firms like Coinbase. So with that, let's jump in here and look at what's going on in these currencies. Look, US dollars is getting stronger. This typically happens when the interest rates goes higher, US dollar gets stronger. When US dollar gets stronger, typically commodities like energy or oil and gold, they tend to come down a little bit. That's what's happening here. And we got FXE here, which is coming down, as you can see here. We got FXA, Australian currency, also coming down. Chinese yuan is also coming down here. So all these international currencies are also coming down, whereas US dollar is getting stronger here. That will cause some issue to international type stocks. because they have to worry about this exchange rate type scenario here. So with that, let's jump in here, look at the sector analysis. As you look through here, we got consumer staples. They also came down, but they're stronger in 5 days. Typically, when stock, when there is a high interest rate situation here, stock market sells off. Consumer staples will give you some cushion because they tend to be a little more stronger compared to these high growth names like cloud stocks. And healthcare is also typically stronger. Look, even though when the broader market dropped here, the steady Eddie healthcare names went higher because you got to take care of your health and buy the tablet and go to a doctor's office. That's why XLV is also stronger here, and gold is also stronger compared to the other stock indices here. That's why when the gold drops, keep buying a little bit gold here. Have at least 5 to 10% allocation towards gold and buy them when the gold drops. Then we got high tech, risk on type play here. Look, XLK down, XLY down, SMH down. It's a good time to buy some of the great names from these ETFs here. Think about Amazon.com, think about great stocks like Shopify or, some of those names. Buy them slowly. Even Meta or Facebook, that also works. Nvidia, AMD, all work here. Buy them slowly. Don't worry about what the pundits say in the market. As they drop, slowly buy them. They will give you more bounce as when there is a good news. With that, biotech is going higher. As you can see here, the virus threat increases. All these biotech stocks like Moderna, Pfizer, they all do well because they will crank up and produce some vaccines that can help us. So with that, let's look at stock news here and go from there. So from a stock news perspective, as you can see here, we got China cracking down on online brokers. That's why Tiger is trading sideways of late here. We got to be a little careful here. You could buy Tiger on down days, but understand Tiger is becoming a long-term play here. Even though there is a high short ratio, if China keeps cracking down here on online brokers, this might take some time to go higher. And then got 1-800-Flowers. Stock drops after the earnings Q1 last year. So I would be buying this one slowly. It's a good company. Temporary weakness, stock came tumbling down. It's good to slowly buy 1-800-Flowers. Then we got US Steel here. They also issue guidance below expectations. Stock falls. It's good to buy some US Steel. You could also buy some quality names like Nucor. It's a good stock. You could also buy General Steel Dynamics. That's also a good one. Take advantage of this drop in US Steel and buy quality names like US Steel, Nucor, NUE, and Steel Dynamic, and take it from there. And we got his lithium stocks here. These are good for electric vehicles. We got LTHM dropped big time. You could take advantage and buy some LTHM. And we also have other names like QS, QuantumScape, SQM, and PLL. You could buy them also into this pullback here. This is an emerging trend. You do well long term. And then you got Jumia here. Stock is very cheap at this time, and they are increasing to scale its platform. It's a good one to buy this beaten down stock here. All these names that you see here, they got high short ratio. Jumia also has a high short ratio, can create a short squeeze. Then you got FT, Future Fintech, very low price stock here. They want to build cryptocurrency mining in US. That can be good news for this company here. Even though crypto is all down at this time, it can go higher as we go forward. And then we got your metaverse play here. We got stocks like Facebook, Micron, and KLIC down big time. Could be a good one to buy them. KLIC has a high short ratio. You could buy that, expect a short squeeze and go from there. And then you got 3D Systems here, DDD. They announced upsized offering here. I think stock came tumbling down, and whenever there's an offering like this, a stock comes down. It's a good time to buy some 3D Systems and go from there. And then you got Clean Spark here. They have 1-year anniversary. I think they're also trying to do some sustainable Bitcoin mining with their renewable energy. The stock is sold off here. You could buy some and go from there. It's also a high short ratio stock. So with that, let's jump in here and look at trend analysis. From a trend perspective, as you can see here, we got clean energy after dropping big time. It's trying to go higher. You could buy some clean energy stocks like Clean Spark here. Take advantage of this bounce here. That could be a turning point here. Look, both Bitcoin and Ethereum both are dropping big time. Sky is falling off. Lot of bad news in the crypto area. That's when you buy some crypto stocks like Btbt, Marathon Digital, and Riot Blockchain. And we got semiconductor down to earth here. Back in maybe 2-3 months ago, semiconductors did not know how to come down or how to pull back. Right now, it's in a good buying zone here. I'm buying some of these names slowly, like Nvidia, AMD, Lam Research, all great ones. You can look at my video where I cover semiconductor stocks and rank them. Buy some of those names. This market drop is temporary. You could do well if you keep buying slowly and accumulate a nice position here. And we got some more here. We got Arc Genomic here. Looks like human genomics is doing well. We will not chase it. And you could look at Fintech. Fintech is a very good area. It's down big time here. Trying to bounce off, as you can see here. I love names like a Block. It was Square before. Right now it's a Block. I think it's a good one to play here. PayPal also works. There are some great names. You could look at my Fintech stocks and pick up some great quality names there. And solar, after dropping big time, is trying to improve. As you can see here, there is a slight bounce. You could look at some top solar stocks. Also watch my video on top solar stocks like Enphase Energy, Solar Edge. You should, and for solar, you can do well. And we got a few more names here. Cannabis, after dropping big time, look, cannabis is coming back here. You could buy some quality cannabis names here and go from there. And we got lithium batteries coming down. That's why you could buy some stocks like LTHM and PLL and some of those battery names, even QuantumScape as an example, and go from there. Look, cybersecurity, after coming down big time, it's going higher. There is a new virus outbreak. That's why these stocks are going higher. Even up here, given RSI is low, you could buy your favorite cybersecurity names like CrowdStrike and Cloudflare, and such names here. Fortinet is a good one too, and go from there. Cloud, it's also trying to rebound here. It's good to buy some cloud names as it's rebounding here. These are the good ones. Multiple high growth names. You should buy them on the down days and take it from there. Look, blockchain down, autonomous driving it down. You could buy some quality names there too, and so on and so forth. Look, after a while, both social media as well as space stocks are going higher. That's also a good news here. And finally, artificial intelligence is also a little bit weak here. You could buy some great artificial intelligence names like Snowflake and Datadog and go from there. So with that, let's jump in here and look at stocks with a heavy short ratio. These are the stocks for you daredevils because these are high short ratio and no other filters. So that's why you got to be careful here. I have indicated some names where you can buy here, but these are really for daredevils. So as you look here, all these stocks have got high short ratio. Look, 85% short ratio in BFRI. That's a huge short ratio. What I typically like to do is I like to go after the companies with nice sales growth and gross margin. Look, I've highlighted few stocks in green background here like ESPR, Blink Charging, ICPT. Those are the names with nice sales growth and gross margin. So you could go after those candidates. Even though they have a high short ratio, they're also growing here. They're the growth names. And you could also look at the valuation here. I got price to sales ratio here. When the valuation is high, indicated by red background here, probably if you're not a daredevil, don't go after those. Instead, go for low valuation names. They will serve you right. Look here, we got ICPT, one of my favorite stock here, $15 stock, nice sales growth and nice gross margin. And keep watching, price to sales ratio is 1, which is very low. You could go after such candidates here, take advantage and go from there. And you could also look at, Beyond Meat. You got to be a daredevil again. It's got a, as you can see, a nice sales growth and gross margin. Stock has been coming down. You could slowly buy Beyond Meat. Understand there'll be some more pain as you go forward. And you got names like Btbt, which I love, which is a great one here. You could buy Vibo after coming down. It's trying to go higher. It's telling you, I'm tired of going lower. I want to go higher. And same story with Valadyne here. It's again a nice EV play. It's trying to go higher. It's also tired of going lower here. And as usual, keep watching what institutions are doing. Look, Lemonade, institutions are buying. Beyond Meat, same story. Romeo and Btbt. Sava or Cassava, one of my favorite trading stock. A nice institution buy here. And RLX, I think this one is a Chinese name. You got to be a little bit careful, but it's got nice institution buying. So with that, I would look at some of these situations here. Be careful when the market is dropping, when the interest rates are higher. Go after nice stocks with nice sales growth and gross margin. And if you're even conservative, look for the positive net margin. I also gave a net margin here. So stocks like ESPR, we got Romeo, Tiger, and Btbt. All these have got positive net margin. You could look at those candidates to be even more careful. We'll filter down progressively as you go forward, so that way you get quality names to play this short squeeze game. And this is the continuation here. Keep watching. Still high short ratio. And keep watching the price to sales ratio or valuation. You can avoid high valuation candidates like Innovio here, and go after lower candidates, lower valuation candidates. They can serve you well in this type of high interest rate scenario. And look here, we got few names, stocks like Sirius XM here. It does not have too much ATR or average trading range, but you can swap in and out if you want to. And we got names like Calhoun Petroleum. This knows how to swing back and forth. Right now it's down. You could buy such stocks here and participate in the short squeeze nicely. This knows how to go up and down quickly. And then you got a few more stocks like VNTR. Shift4 is one of my favorite here. Cinemark, it's a meme stock. And we got a few more as you can look here. All these stocks will work here. As usual, keep watching what's going on in 1 day, 5 day. If you see a small bounce in, for example, here we got QLGN, a small bounce. It's a penny stock. You got to be careful here. Not suitable for everybody. In such names, when there is a short term, it goes higher in the short term, that tells you this can have leg here. We got one more here, Sirius XM, trying to go higher in 5 day, 10 day. That also tells you it's got some legs. So with that, let's jump in. Look, next ID here. This has been in the dump for a long time. Now it's trying to go higher slowly. You could look at such scenarios, but next ID does not have any sales growth here. I would be careful. So with that, let's jump in and look at continuation here. You got a few more names. High short ratio again. Keep watching. Good RX has got nice sales growth and gross margin. You could take advantage and buy some good RX at these levels. Even though it looks like stock is dropping, I would be slowly accumulating. And we got similar names here. Chewy stock was doing great last year when everybody was working from home. Right now it's giving back nicely. You could slowly buy stocks like Chewy and sock it away. And we got a few more here. We got some of great stocks, meme stocks like AMC. AMC is also down big time, and now it's trying to look. It's not as much down here. You could take advantage and buy some AMC slowly here and go from there. And we got a few more. My favorites are stocks like 1-800-Flowers came tumbling down after the earnings. You could buy that also here. And we got CLR. It's an energy stock. You could buy CLR also here. Nice short ratio. And keep watching. We got a few more names here. Marathon, one of my favorite here. High short ratio. You could buy some Marathon also here. And IIVI, I like this one too. Keep watching high valuation names like Skills, even up here. Skills has got, I think it's a Sense. SENS has got a high valuation. You got to be a little bit careful there. And MUIS, Microvision, look, there is a high valuation. Got to be a little careful. Along with the Marathon Digital, even this one also has a high valuation. So with that, let's jump in here and look at stronger candidates. These are the ones with the positive gross margin, low RSI, and volume greater than 1 million. So these are stronger candidates. I would be going after these candidates versus just going after just the high short ratio names. So we are getting stronger candidates here. Look, we got all these names here on top. They got nice sales growth and gross margin. And look at the valuation, with the exception of Blink charging here, others have got low valuation. So I would be going after stocks like ICPT, which is one of my favorite. Huron Therapeutics also works. Btbt, again, one of my favorite here. Look, Vibo also works here. It's a good one. Just 3 is the price to sales ratio. Stock is trying to go higher. You could buy that one too. And it's a IVC, InnoCare. Look, stock is trying to go higher in one day. You could look at such scenarios, but that one does not have any sales growth. You got to be careful and be a contrarian there. And stocks like Calon Petroleum, that works. Shift 4 also works here. I like that one too here. With that, keep watch on high debt scenarios here. Stocks like Beyond Meat, a little bit high debt ratio for me. And we got one more here, Huron Therapeutics, a little higher debt. You got to watch such candidates here. Look, we got Rite Aid, huge debt load on their back. It's difficult to carry such a load in this down market. You got to be careful there. And next we got few more. It's a continuation. Great stocks here. Look, we got good stocks you could buy, like Bcrx, nice good one here. You could buy slowly here. And we got few more names as you scan through here. 1-800-Flowers, a good one you could buy. I'm seeing some Chinese names here, like IQ here. It's trying to bounce back. It's telling you I'm done going down. And same story. ATUS trying to bounce back here. Those could be good candidates to slowly buy. And we got here Geo Group trying to bounce here. You could look at such candidates and keep watch on the high price to sales ratio candidates like SANS and Microvision as usual. And we got continuation here. You could look at these names. Pay attention to names with the green background here. Those are the ones with the rule of 40. They have sales growth and gross margin. And if you want to be even more careful, keep watching the debt to equity ratio here. Try to avoid the ones with a high debt to equity ratio. That will serve you well. And you could also look at stocks with nice profit margin here. Look, we got few names here with nice profit margin, like Riot Blockchain. That's a good one here. You could buy that one, and you could also have a few more here like Dick's Sporting Goods and also Tellurian, one of my favorites. You could look at such candidates here. All right. So now we look at better way to grow your portfolio. It's actually even better way. These stocks have got nice rule of 40. Sales growth plus gross margin greater than 40%, low RSI, volume greater than 1 million shares, and low valuation. In the situation like high interest rate scenario, you got to go after low valuation candidates. High valuation candidates can come down tumbling due to this high interest rate situation here in the rotation game. That's why low valuation candidates are always preferred in this scenario. So look here, we got few candidates here. All these stocks, keep watching the valuation here, PS ratio, all below 15 here, and some are even lower, as you can see here. These names will work here. You could go after stronger candidates like Btbt, that works here. And if you want to avoid Chinese names like Tiger and GoTo, I understand, but you could look at stocks like 1-800-Flowers. CLR is a good one here. Sunworks is just $3 stock. Look, nice nice sales growth here. And we got names like United States Steel. It wants to go higher, as you can see here. Could be a good one. Nice high short ratio. And keep watching. Got some great names. KLIC is one of my favorite here. It's a semiconductor stock coming down here. Could be good metaverse type play here. Jumia, one of my favorite. LTHM, same story. You could look at some of these names here along with the Clean Spark, a good one here, and buy them slowly. These are strong candidates, even though it might take a while. It's worth buying these names here. Look, we got my favorite here, DDD also. So with that, it's a continuation here, same story, high short ratio, nice sales growth and gross margin, as you can see here. You could look at some of these names here and go buy them slowly. Look, we got cannabis coming back nicely. You could buy quality stock like Tilray here to take advantage of that. and you could buy, like NVTA. It's also a good one to buy slowly. Chinese names are bouncing. Look, Huya is bouncing back in one day here. Tells you they're tired of going down here. So with that, let's jump in here and look at best way to grow your portfolio. So these are progressively better companies, positive sales growth, positive gross margin, positive net margin. These companies make money and low debt, low RSI, low valuation. So if you want to play short squeeze game and still want to be safe, you could look at these stocks here and play the short squeeze game. As you can see here, because we filtered so much, we don't have a big list here. You could go after these candidates here like Tiger. If you want to avoid Chinese stocks, you could, you don't need to go after this. But look, Btbt, 1-800 Flowers, CLR, KLIC is one of my favorite. DDD is a good one. We got Huya trying to jump back here again, a Chinese stock here. And we got Revolve Group and MGY. You could look at these candidates here. Nice sales growth, nice gross margin, nice net margin also, and high short ratio. You could play short squeeze game slowly here and go from there. And next we'll look at when high short ratio meets short squeeze. These stocks need to go higher or lower quickly. High short ratio means there is a high chance for a short squeeze. There's a TTM squeeze means these stocks can't wait. They got to go up or down quickly. Let's look at those stocks and go from there. Look, we got a short list here. We got Shift4. Shift4 is a great fintech play here, $50 stock. It's been going down off late. Debt to equity ratio is a little bit high. They got a little more debt on the balance sheet. Look, PS ratio is low. You could buy this one here. It's got a short squeeze, high short squeeze, 20 short ratio 20%. Also a one-day squeeze here. You could take advantage of this. There's a TTM squeeze in one day. You could buy this one slowly and go from there. And then you got a few more names here. Look, we got Groupon, and we got Cano Health, BGS. And names like Groupon here, I think it's a good one here. It's going higher. Even the market is dropping, Groupon is going higher. And it's got a weekly squeeze here that tells you it can go higher for weeks to come. So that's why I like names like Groupon at these levels here. Given it's trying to go higher and there's a weekly squeeze here. And then you got a few more here. BG Foods, again, same story. It's slowly trying to go higher here. And it's got a daily squeeze. That's a good one too. And we got a few more, as you can see here. We got PagerDuty. This stock has done nicely after the earnings. Nice sales growth and gross margin. And it's got a monthly squeeze. Tells you it can do well for months to come. You can look at that one too. And we got a few more, as you can see here. Overstock, which is again, it did very well back in 2020. Ventured into furniture retailing. Now it's coming down. You could take advantage and buy some Overstock also here and go from there. Look, valuation is low for Overstock here, just one. And we got GBT and BLDE. You can look at that one too. So when there's a high short ratio as well as a TTM squeeze here, either 1 day, 3 day, or 1 month or a week, those stocks cannot wait. They got to go high or low pretty quickly. So with that, let's jump in here. As usual, keep watching RSI levels. When it's too high, don't buy. Wait a little bit and look at the catalysts like insider buying, institution buying, and also look at the short ratio. That can help you, to buy great swing trading opportunity where short ratio is high. There is some catalyst and there is some nice rule of 40 or a sales growth or a nice gross margin. Those can serve you well. So with that, thank you very much. Happy investing and trading. Please subscribe.